It is no secret that star investor Cathie Wood is a huge Tesla bull and is optimistic about the EV company's future, but it is still worth knowing what she thinks about Tesla's future now. You definitely wouldn't want to miss this one. In early October, star investor Cathie Wood purchased 132 Tesla shares. Did you know that she believes the stock will go 10x? After Tesla revealed its delivery and production figures through a press release in late October, Wood's flagship fund ARK Innovation purchased a tranche. This was her firm's second purchase of EV maker Elon Musk's business in October 2022 alone. Woods also purchased an additional 190 shares in Musk's company. Wood's most recent purchase was made after Tesla's Q3 announcement caused the price to drop. In light of the fact that Wood expects Tesla would increase by 10 times in an email update to investors, this alone demonstrates her positive attitude on the company. Wood argued that by halving the price of an electric vehicle, Tesla could increase its addressable market by 10 times. However, experts have been questioning what the company's future might hold in light of the increasing popularity of its EVs. Wood's 10x prediction was made on the same day that these questions were raised. Concerns about declining demand led Tesla to lower the prices of its electric vehicles in China. The company also slashed the prices of its Model 3 sedan and Model Y SUVs by 5% and 9%, respectively. Even in China, the largest automobile market in the world, demand for Tesla vehicles may be waning due to growing competition from local automakers like NIO, but with Tesla stock, the notion that Tesla could be better suited delivering less expensive automobiles is supported by the fact that rising today's markets don't seem to be reacting too negatively to the price reduction news. Recently, during the Tesla Q3 earnings call, Musk stated that the company is working on an electric vehicle that will cost about half as much as the Model 3 and Model Y. Although Tesla is one of the most well-known brands in the global electric vehicle market, there is no denying that its cars are expensive. It is well known that Tesla failed to meet Wall Street expectations in the third quarter financial report, which suggests that consumer demand for an expensive EVs may be declining as a result of financial pressure, according to Barron's, an American weekly magazine newspaper published by Dow Jones and Company. Many Model 3 and Model Y vehicles sell for approximately $60,000 each, and EVs vehicles account for only about 5% of all car sales in the United States today. According to Cathie Wood, LED ARK Invest, cars priced over $60,000 account for only 5% of the U.S. automotive market. At the same time, the market grows to almost 50% when a vehicle falls below $30,000. As a result, if Tesla were to introduce a less expensive model than the Model 3 and Model Y, its addressable market would increase significantly. Companies selling more affordable products are likely to benefit the most compared to Tesla. Automakers like General Motors, Ford, and Toyota offer much less expensive EVs, but none of these companies have Tesla's cachet when it comes to electric vehicles, so Wood's prediction that Tesla will see a much larger addressable market is warranted. ARK Invest stated in our view that fears of declining demand for Tesla vehicles are misplaced. If anything, Tesla is supply constrained at current price points, and a $30,000 vehicle could expand demand tenfold. Perhaps there has never been a better moment for an affordable Tesla model than right now, with Tesla ahead of investor relations, as the market works out a less expensive model. Business Insider, the original publication of Insider Incorporated, focuses on business and financial news. According to the report, Martin Vida revealed at a Goldman Sachs conference that Tesla has plans to roll out a more affordable model in the future, but it may not be its priority right now. Vida acknowledged the need for having a broad portfolio if the company wants to be a high-volume automaker before unveiling its company-operated robotaxi. Tesla should provide a more reasonably priced model. He said the senior executive does not see the need for a new model anytime soon, given the stronger than expected demand for its Model 3 and Y vehicles. Model E will basically next year become the best-selling vehicle of any kind of all time in the world. Vida reportedly said this is notwithstanding the elevated costs from the Fremont factory and including almost no leasing. He said the cheapest Tesla vehicle, the Model 3 rear-wheel drive, costs $403 390, including potential incentives and gas savings rumors of a 25,000 another car, have been long in the works, though neither Tesla nor its CEO Elon Musk has shed concrete details about it. However, others believe that Tesla is not going to build a low-cost EV anytime soon, if ever. There are several reasons for this. First, Tesla is making so much money through profit per sale right now that it would seem daft to weaken that with the lowest cost model and smaller margins. Second, given the worldwide shortage of chips, it is focusing on the already highly popular and profitable models 3 and Y. But there is something more fundamental behind Musk's reasoning, and it goes to the very future of the electric vehicle transition and car ownership, and it helps explain the astronomical valuation of Tesla, because this is not just a car company that happens to be electric, it's just as much a software and service company. A fully autonomous car will be used 5 times more than a regular privately owned passenger car, which delivers a massive amount of potential revenue and earnings from a single vehicle. For the time being, Musk says full self-driving could deliver the biggest uplift in asset value of any product ever seen. Musk dismissed the idea that Tesla had time to focus on a 25,000 EV in the 2021 Q4 earnings call, saying that we already have too much on our plates. There will be other significant impacts as well, such as the elimination of the need for parking lots, because cars with FSD can be used much more frequently than cars with drivers. However, there may be a major issue with an increase in traffic because there will be an absurd number of cars on the road. Still, it will be, in his opinion, significantly less expensive to go from point to point with a robotaxi, which is an autonomous Tesla that costs less than the subsidized value of bus tickets. Musk claimed that even Cathie Wood's company ARK Invest estimated in its Big Ideas that Elon Musk's robotic taxi fleet may provide more than $1 trillion in operating profits annually by 2030. The creation of the robotaxi fleet, together with its autopilot and FSD software, is the cornerstone of Tesla's autonomous plan, according to a 2021 study. The EV manufacturer unveiled its full self-driving beta in late 2020, and it is able to drive on inner-city streets. Although Tesla has made tremendous progress with its FSD beta, some support exists for the company to launch its ride-hailing service with drivers behind the wheel. There is some debate at Tesla about whether or not to launch a human-driven ride-hailing network. We believe it would be a very good bridge to their autonomous strategy, and we think they will decide to do that. Wood expressed some of ARK's general thoughts on the matter, suggesting that some Tesla owners seem to agree with ARK Invest's opinions about the robotaxi fleet despite the FSD. If Elon Musk's electric vehicle manufacturer were to create a product that could be sold for half as much as its present offers, Cathie Wood and the ARK Invest team believe that Tesla could increase its total addressable market by a factor of 10. Other specialists have also shared their thoughts on the potential impact of more reasonably priced EV vehicles on Tesla's future. If and when Tesla does begin producing affordable electric vehicles, it will be very beneficial to a larger population as well. Imagine being able to purchase an EV at a reasonable price. Subscribe to this channel and watch as our community grows tenfold. Tesla's 10x growth is nothing but good news for its investors.